This is the Aftermarket Radio Network.
Welcome to another episode of Business by the Numbers. I'm your host, Hunt Demarest CPA with Paar Melis and Associates. By the time you are listening to this, everyone's favorite holiday, April 15th, Tax Day, has come and gone. That means that at this point, you're in one of three different buckets. You either just paid some money, you got some money back or waiting for some money from the government, or you've already extended and that is a future problem. This week, we're going to talk about tips for every one of those groups and what you should be doing depending on how your tax season went. It went well. What can we do to try and make this year and the next tax season just as good? And you want to change some things about it. What should you be doing now to maybe get ahead of this stuff? Before we get into that, I just want to stop and say thank you to you and the rest of our dedicated listeners. Remember, if you want your question answered live on here, just got a question for me, shoot me an email at podcast@paarmelis.com. Want to talk to us about accounting and tax services for your auto repair shop? Shoot us a text at 301-307-5413. And lastly, we cannot forget our dedicated sponsors, NAPA and Promotive, for being such loyal supporters of the show. If you need to hire the next person and don't know where to start, give Promotive a call. And if you're looking to get the next level out of your shop management system, give Trax a call, and they can help you out just like they have hundreds, if not thousands, of other shops. Hey, did you know NAPA Trax is on-site training plus 6 days a week support? It all starts when a local representative meets with you to learn about your business and how you run it. After all, it's your shop, so it's your choice. Let us prove to you that Trax is the single best shop management system in the business. Visit them online at napatrax.com. That's NAPATRACS.com. If you're looking for a full-service staffing solution that does everything from sourcing, qualifying, creating job descriptions, scheduling interviews, to negotiating job offers, Promotive is your answer. Visit them online at gopromotive.com. With the three groups of people that we'll be talking about this week, two are people that have already filed and either have got money back or have owed. The other group is what we're going to talk about first. It's the people that are yet to figure this stuff out and decided to file an extension. You filed an extension. Is that a bad thing? And I should kind of preface this with none of this stuff is great advice for you specifically. Why? Because you're unique. Everyone's unique. There could be a reason you owed a bunch of money and your accountant could have done an awesome job. You could have got a bunch of money back and your accountant could have done an awesome job. Don't think that this is an episode to go back and you can come yell at me. If you're one of my clients, you're free to yell at me. That's what you pay to do. But again, just because you're in one of these groups and you want to be in another one, it doesn't mean that it's always your control. The reason I say that is I'm not a big fan of extensions. I say if you can, no one should file an extension. And I stand by that. An extension is, I guess, a courtesy that the government allows us. But if you can, there's generally no reason to delay the inevitable. And if you're going to get money back, why the heck are you ever going to extend? By extending, you're making it slower for the government to pay the money that you're owed, or you're getting refunded back. And again, if you are going to pay money to the government, then you're still going to have to pay. Whether you're going to pay in April, you're going to pay in September and October. The big thing that you might be saying to yourself is, Hunt, I am going to pay in September and October, but wouldn't you rather pay 6 months later if you could? Yes. But the thing about this is we're also going over a lot of time period between April and September and October that most other people are forecasting and planning for 2025 taxes. If you want to extend, if you have to extend, that is fine. But remember, everyone else's life is still going on and people are currently setting up their estimated payments for 25. All that being said, if it makes you feel better, I extended my taxes. I did not file my taxes. It's actually the tax day when I'm recording this. This is April 15th, and I did not file my taxes today. I'm here to admit that. The thing, just like a lot of my clients is there's no way that I could file today if I wanted to. Unfortunately, there's a couple investments that I have that these guys just never send this stuff until July or August. We do some other stuff with retirement that probably predicates taking a little bit extra time. But there's a prime example. I'm your accountant. I do some of your guys' taxes, and my own tax return is extended. Do I know what I have to pay in? Is all of that money satisfied right now? Yes, but I'm not going to be able to file that until later in the year. Let me back up there because I think there is a very, very common misnomer that I need to get into your skulls about extensions. Really, when we're talking extensions, we have two kinds of extensions. And generally, again, we're talking about S Corps, partnerships on here. If you're a C corporation, a little bit different. But we really have two big dates in the tax season. We have March 15th and April 15th. April 15th is the one that everyone knows is tax day. And whether you knew it or not, your businesses are technically due on March 15th. March 15th extensions for businesses is almost a no-brainer because your income flows through your business to your personal taxes. Your business tax return, you're not paying any tax, maybe to the state, but to federal, you're a pass-through entity, meaning that whatever gets reported on there ends up getting reported on your personal, and that's where you pay taxes. If your personal's not done, there's no reason to finish your business one, and generally most people extend that unless the personal and business are ready to go. The March 15th deadline is a deadline. We automatically file these extensions for our clients that are not ready. Most accounts are doing this stuff, but April 15th could not be more different. April 15th is the drop dead date where the government says you need to pay us our money by April 15th. You can still file your taxes 6 months later, but whatever you owe us, we need that money today. This is an extension of time to file, not an extension of time to pay. You think you're going to owe 20 grand, you pay the government 20 grand with your extension, and then 3, 4, 5, 6 months down the road, you go back and reconcile that with them. If you overpay, you are never going to get penalized for filing late. If you owe them money, you're going to get penalized every single day, every single month that money was late. There's interest on this stuff. There's penalties for not giving it to them. Generally, when we do extension payments on it, I not only want to make sure that I'm satisfying last year's tax liability, I'm probably going to shoot at 20, 30% over. Because again, the downside is if you undershoot this, you don't give the government enough money by April 15th, that $20,000 tax bill, if you pay it in June, is now probably 22 grand. However, if I would have paid them $25,000 in April instead of 20, I'm going to get $3,000 back in the form of a refund. I'm actually not going to owe any penalties of interest. I get it. It doesn't really seem fair. Technically, they do pay you guys interest on the refunds, but no, it's nowhere close to what they penalize you or charge you for not paying them. Were you surprised? Did you really think that we have the same rules that the IRS has on us? No. Another big one on this that I hear a lot is, I'm not going to file my taxes. I'm just going to file an extension because I don't have the money to pay this stuff. Payment is completely separate from taxes. There's actually a non-filing penalty and a non-paying penalty. The non-paying is much, much, much larger, but there's no reason to not file if you don't have the money. If you don't have the money to pay it and you want to set up an installment agreement, then you need to have the tax returns filed because it's not even on record with the IRS until you file that stuff in there. Let's talk about that for a sec, because this will come up in a little bit of people that owed some money, but if you don't have the money to pay your tax liability, whether it's an extension payment, whether it's a balance due, whatever it is, what I always tell my clients is, how long is it going to take you to pay this balance due? Because that is going to be the difference between calling the IRS and doing something official and probably just riding this out. If you are going to be able to pay this balance due in the next 3 to 4 months, if you say to yourself, Hunt, I owe them 20 grand, but I'm going to be able to pay that in there by whatever, the summertime or when business picks up, I wouldn't call the IRS personally. You can try to call the IRS. You're not going to get anyone on the phone. By the time you're able to get a hold of someone, talk to someone about an installment agreement and set that up, you probably would have already just been able to send them in payments. You can send them in partial payments on this stuff. You owe them 20, you can send in 7, you can send in another 10. I do not recommend that because they're going to lose at least one of these payments. Anytime you send a payment to the IRS, try and do it electronically because they seem to be losing those ones less. And if you are sending in, you try to just send it once. If you send them 3 extension payments on it, I'm not going to guarantee it, but I would guarantee it that they're going to probably miss one of those 3. Don't make their job harder than it needs to be. But again, extension of a time to file, not an extension of time to pay. My tax return's all done. Don't have any money. Again, it's neither here nor there as far as extensions go. The point of this episode is not only to educate, as you can hear, a little bit about how you are in the position of where you are and what you maybe did or didn't do to get there, but also give advice to these 3 specific groups on, all right, if you are in this bucket, what should you do now? If you didn't file an extension, right, and didn't pay in, then Let's say that you filed an extension, but you're not in this category that we were talking about. The extension wasn't really done the way that I would like. I didn't get my accountant all the information, or there's an investment that I just have no idea what the income's going to look like, or it's just been a rough first quarter and you just didn't really spend any time on this. My biggest advice for you is don't panic. You just heard me talk about the clock is ticking. Yeah, you're probably going to get penalized for not paying this taxes in. And there is daily penalties on this stuff, but more or less the way that the IRS operates is 30-day windows. If you miss the April 15th window, your new deadline is May 15th. By the time you hear this episode, you probably have 20 days. Do not try and freak out and rush this and miss deductions, and don't look at that to try and get this filed on April 25th. More or less, the damage has been done. It's not going to get that much worse. The only thing that could make this worse is you magnify it by missing deductions or making a mistake that's going to cause you issues down the road. I get it. You didn't file it this year. You're going to do better next year. Don't try to make it all up right now. It is much, much, much more important to make sure that you have a good, accurate, down to the penny tax return than it is to freak out and try to make up lost time when you got a late start this year. Don't panic. Get your stuff together. Get your information on it. And really, it's not as insurmountable as you think. I get it. You don't like taxes. Most days, I don't like taxes either. They'll throw you in jail if you don't file them. I'm not sure what else to tell you. I get it. They stink. They take our money, yada, yada, yada. They'll put you in jail if you don't pay them. So just do it. Let's face it. Your shop management system is the single most important tool in your shop, period. You need NAPA Tracks because it integrates with all the major players, including NAPA ProLink, Parts Tech, OE Repair Link, Epicor, Tire Connect, Mitchell 1 Pro Demand, and more. NAPA Tracks has leading-edge tools and technology that your shop needs right now. Unlike the other guys, we'll be there after your installation with the best training and support in the business. Your training includes a learning management system that is tailored to each role in your company. Simply put, Trax was designed and built for shop owners just like you. It all starts when a local representative meets with you to learn about your business to help optimize your shop's workflow, efficiency, and profitability. For over 30 years, NAPA Trax has made selecting the right shop management system easy by offering the best, most comprehensive SMS in the industry. After all, it's your shop, so it's your choice. Visit us on the web at napatrax.com. That's napatracs.com. Shop owners, are you struggling to find and retain top-tier talent for your automotive shop? Introducing Promotive. On the web at gopromotive.com. With over 40 years of combined industry and recruiting experience, we're the ultimate staffing solution. We go beyond traditional agencies. Our team provides dedicated recruiters and account managers advising on processes, compensation, and benefits. We focus on placing technicians and service advisors with shops that offer the best culture, training, and long-term growth opportunities. Trust our experience to match the right talent to your shop. We carefully select shops that value employee excellence and provide an environment for success. Our dedicated team leads the entire process, leveraging our industry knowledge and expertise. Partner with Promotive and experience their advantage to help you build a high-performing team that drives your shop's growth. Visit gopromotive.com today and let us help find and keep the best talent in the industry. Let's say you're in the other bucket. You're in the bucket with me. You filed an extension. You feel comfortable. I shouldn't say comfortable. No one feels comfortable with the taxes that they pay, but you feel confident that you don't owe them any more money. And just like me, you might be forced to file an extension on this, and you're really just taking the next couple months of just waiting for someone to send you a piece of paperwork so you can finish your taxes. If you are in that boat with me, like I said, there's not a whole lot that you could really do for last year. Make sure everything's good, fine-tune stuff, see if there's any things that, was overlooked. But realistically, the big thing that I want you to be doing is, like I was talking about before, do not forget what you should be doing right now. Yeah, you are on extension. You got an extra 6 months before you have to pay the piper or figure out what last year looks like. Estimated taxes for the first quarter of 25 are due April 15th. By the time you hear this, they're already due. You maybe missed that April 15th estimate. Don't panic. Let's get this stuff done. Get an extension in there sometime in May, and you'll be all right. The big thing on this is I see a lot of people that extend are generally my higher income clients because they have investments, and retirements are the biggest thing that delay stuff outside of our control. And the biggest thing that I see is these people get themselves into a bit of a spot because they're not even worried about taxes for this upcoming year until sometime in September when they finally finish up their previous year tax return. But by that point, they're already 9 months into the year, on track to make even more money, and a lot of them fall behind on their estimated taxes. You file an extension, fine, your work is done for 24. Now you got to start on 25, or make sure your accountant's looking at 25. We covered the first category, the first group of this. Those of you that filed an extension, and really there is probably the most information for that first group because your year is not done. Now, for the next two that we're going to talk about here is your taxes are already done, and you went one of two different directions. You filed your taxes and you owed money. You filed your taxes and you got money back. If you are listening to this and you filed your taxes and it wasn't like deliberate, you actually got zero money, let me know. I've never personally seen this. I even talk about it in here. It's always the goal to have the taxes come to zero. With rounding, believe me, I've tried this stuff. It's really hard to do. Even me messing around with some things on this, to have a tax return with zero balance due, zero refund is pretty rare. And maybe that's just like a nerdy account thing. That's my holy grail. I want to see a tax return where it just, your withholding was exactly what it should be. They don't owe you money, you don't owe them, and you get to live to fight another day. Realistically, it never works out that way. We're going to look at these last two groups of really, one of them is probably the group that you want to be in, and the other one is the group that you should want to be in. One of them, you're probably not happy that you're in that group, but you're in the best place. And the other one, you're probably happy and you probably shouldn't be. What I mean by that is this. So if you owed money to the IRS, whether you know it or not, you are actually in the best of all the three groups. Because if you owed money to the IRS, it means that you probably made money, which is the name of the game here. You're in business to make money and hopefully pay as least a little of that to the government as legally possible. Also means that you had to pay in the government. You weren't waiting for any money back from the IRS because you gave them all that you legally had to, and you're able to pay the remainder before the due date. If all of this is planned and all of this was by design on this, like I said, this is where you want to be. You achieved it. Owing money, paying tax to the government, it's never fun, but it's the best place to be right now. If this is unplanned, the good news is that you paid it before the deadline and you avoided the penalties of filing this stuff late. But the bad news is if you had a balance due, the only good news of an unplanned one is that it's over. The bad news is you probably paid more than you had to because you can't reduce what you don't know about. If you weren't tax planning on this stuff last year, when you would have had a plan for this, how could you have possibly minimized your tax liability? And another thing about it is if you paid a large balance due and it was unplanned, then I would argue that you probably didn't pay in your estimates as you were supposed to, and you probably got penalized. This is one thing that I'm going to remind people, and you probably forget about this because I've seen your tax returns. Most of you guys did not pay the quarterly estimates that we sent you. So I'm talking specifically to you. If you owe the government $20,000, are you allowed to give them a check for $20,000 on April 15th? No. The IRS essentially wants that split up equally throughout the year. It gets a little bit convoluted on this, but essentially if you look at your total tax liability, you need to pay 110% of that for the upcoming year. Let's say that your tax liability is $20,000. Not what you got back or what you had to pay come tax time, but your total tax that you paid for the entire year. You have to pay 110% of your previous year tax liability. Pretty much the government says, if you know that you owed us $20,000 last year, you need to pay in quarterly equal withholding. Throughout the year, though, we now need $22,000. If you cover your last year's tax liability and a little sum, you are not going to get penalized by paying the remainder of that in April 15th. So if you owed $20,000 last year, you paid in $22,000 in estimates this year, and you owe them $1 million come April, you will not get penalized a single cent because the IRS says you're only responsible to pay in what you know about. If you have a $20,000 tax liability last year and you want to pay that full $20,000 in April, and you don't want to pay any estimates, I don't want to give the government any of my money tax-free. I get it. I've heard it. The government will let you do that. They're just going to charge you a fee for it. You want to pay us all in April? It's going to cost you around $22,500 because we're going to penalize you or charge you interest of when we should have had this money. I get it. How are you supposed to estimate this stuff? How are we getting penalized for not giving them estimated taxes? Believe me, guys, I've heard all the arguments on this. Don't shoot the messenger. Pay your estimates. Before we wrap this up and stop thinking about taxes for maybe another 12 months on this, we are going to go to the last and final group of this, and that is you got money back from the IRS. This is where everyone wants to be. Oh, how are your taxes? You getting a refund back? Yeah, I'm getting a refund back. Isn't that awesome? A refund is not the IRS giving you money. A refund is the IRS giving you back your money that you overpaid to them. Think about if you went to a restaurant and your bill was $30. If you had never given them any money, they're going to come to you and say, sir or ma'am, you owe us $30 for your meal. And you're going to say, okay, cool. Maybe you're like, oh, that's expensive for this meal. Imagine it this way. You go to that same restaurant. You'd already given them $60 the day before. Once you finish your meal, they come and give you $30 back. And you think to yourself, holy crap, I love this restaurant. I just made $30 by coming into this restaurant. You didn't make $30. They gave you back your overpayment. The meal still costs $30. It's the whole idea on taxes. If you're getting money back, it's your own money that the government has held. Again, they do pay interest on this. It's not very good. In the grand scheme of things, they're paying more than what they used to. But would you rather have that money throughout the year, or would you rather the government have it? In practice, like I said before, you don't want to owe the government anything at all. You don't want a refund. You don't want to owe them money. You want to be at zero. But personally, I've never seen a tax return go to zero. You're always going to be in one of two different categories. If you are good with your money, it is always better to pay at the last possible date legally possible. Like I talked about before, if you're diligent with your cash, if you are looking at this stuff, paying your quarterlies, the minimum that you legally have to, set the other money aside so they can gain some interest on it. And I send this money out April 15th. You're not going to get a day early, but I'm deliberate. I'm not going to spend that money. I'm going to set it aside. It's already planned for. Some people don't trust themselves that much. Some of my clients like to almost guarantee themselves a refund. Hunt, you know what? If I have it, I'll spend it. Let's try to make sure that I'm always going to get at least a $5,000 or $10,000 refund back. If I don't need it, we'll apply it till next year. Then I will always have this in a bank. And maybe if money's short, I'll take that and get cleaned up on some stuff. Yeah, it is a more or less tax-free loan to the government, but be realistic with yourself. If you are in charge of holding your own tax dollars, you're going to save them, you're going to squander them. You're going to save it, then do it. You're going to squander it, then protect yourself from yourself and just send that money to the IRS. The advice for this category. We already went through advice on the extenders, the owers, and now for the refunders. I'll break this into two separate buckets. If you got a small refund, we'll start with small refund and go to big refund. So if you got a small refund, like $5,000, $10,000 or below, that's what we consider a small refund in the grand scheme of things. If you're okay with it, keep doing what you're doing. You're probably in that category where you like to pay a little bit more in to have that peace of mind that I'm not going to get that April 14th phone call. I always have a little bit of money in the bank with the feds and I'm going to be okay. Again, if you think that you're going to do better this year, maybe increase that a bit. You saw your refund 2 years ago from $10,000 down to $5,000, and this year is only $1,000. You're probably starting to make some more money. So if you like the idea of getting a refund, probably give yourself a little bit more padding there. How's business doing? That was last year. This is this year. Business stinks. You guys slow. You guys dipping into emergency funds to get by. Be careful about sending those estimates in. Not all accounts are as good at forecasting and staying ahead of this stuff. The last thing you want to do is send in massive estimates right now with a business that's not making any money. Because if you do that, you will get to our last and final one is, Hunt, I filed my taxes and I got a massive refund back. And again, you probably could be somewhere in the middle on this. And when I talk about massive refunds, big refunds, again, it's all relative. But $30,000, $40,000, $50,000 refunds. I think the biggest refund we had this year was like $180,000. Not ideal, honestly. This is what everyone wants, is a massive refund. If you're getting a massive refund, one of two things happened. You either had really bad tax planning or none at all, because someone probably should have seen a long way before this. This is not a good year. Stop paying on all these estimates. Or you had a significant one-time event, either in a negative or positive way, that kind of created this. If you got a massive refund on this and you had a one-time event that maybe gave you a big deduction. Maybe you did a cost segregation, I don't know. But it was a one-time event. Remember that, because I've seen a lot of people fall into this trap of, I got $30,000 back last year. I'm not going to do that again. I'm going to just get rid of all of my withholding. But the reason you got all that money back last year was a one-time event. We no longer have that one-time event. Income's going to be much higher, and now your withholdings are much lower. And you could get yourself into a really, really tricky spot pretty quickly. The other flip side of this is I've seen people that are just on autopilot. It's the same estimate you paid for the last 3 years, and business is just not there. If you're saying to yourself, Hunt, this is the second year in a row I've got a big refund, talk to your accountant. Figure out how you guys can get this lower and if this makes sense. And again, if you might be falling into a category where your accountant says, you know what, Mr. and Mrs. Shop Owner, you actually do not need to pay X, Y, and Z. You only need to pay this. The big thing I'm going to leave you with is remember what I just talked about. They're going to usually give you what you legally have to, what you should. You know yourself. If you're afraid that you're going to spend this stuff, if you're afraid that you're not going to have it when the time comes, Mr. and Mrs. Accountant, can I pay him a couple extra bucks? Make sure we stay ahead, especially for these first couple quarters. Same flip side. You know that your business is not doing well. So if you get that call in the summertime where you have a bunch of estimates you got to owe, be honest. I don't have any money. I might still owe tax because just because you don't have cash doesn't mean you don't owe tax, but it never hurts to ask. No matter what category you fall into for this tax season, or you did, the good news is that there's always next year. If you want to try to plan better, pay less, or anything else. I know no one likes paying taxes, but staying ahead of these taxes and not letting them snowball and build up and have an insurmountable bill in 12 months is a 12-month plan and not a 12-day plan. Plan ahead, call your accountant, pay your taxes, or don't pay your taxes. That's your choice, not mine. Please share with friends. If you have any questions, comments, or ideas for future episodes, shoot me an email at podcast@paarmelis.com. Want to talk to us about taxes and accounting for your repair shop? Give us a text at 301-307-5413. Just want to say thanks again for listening on the Aftermarket Radio Network. You can find all shows on the aftermarketradionetwork.com and on your favorite podcast listening apps. So thanks again for joining me on Business by the Numbers. Stay safe out there, and I will talk to you all next week.
You've been listening to Business by the Numbers with Hunt Demarest on the Aftermarket Radio Network. Follow Hunt on your favorite podcast listening app. Let him know what you'd like him to cover. His email is in the show notes. Hunt is all for advancing the aftermarket.